the dollar move and foreign flows, especially sectoral opportunities, is what will define the coming year. Listen in to a slice of that conversation.
2025 was a remarkable year, and I think some of the things that we saw in 2025 will continue to be a feature in 2026, but the magnitude may be different. So what do I mean by that? I mean that 2025 was a year where really we saw these global megaforces transform the global economy. Right? So it was less of a story about sort of traditional cyclical drivers. It was more of a story about structural dynamics that are changing the global ecosystem, which have implications for America, for Europe, and of course, for India. So you've highlighted some of them already. The idea of the geopolitical backdrop kind of rewiring fundamentally. What does that mean in terms of 2026? Now, our view would be that there's likely to be greater stability in 2026 relative to 2025, and that is probably a force for positive in terms of the region in India. You also talked about the idea of the rates path and the uncertainty around that. And that's one thing I think will continue to matter in terms of 2026. And I think we're going to see more of a divergence internationally with regards to the policy path. You always expect a difference between emerging markets and developed markets to some degree, but I think it'll be interesting to see how that starts to kind of vary even further. So as I look to 2026, I think the continuation of 25 is the idea that these global megaforces dominate. And I've talked a little bit about geopolitics already. I think one thing that I think is particularly relevant to India and the outlook in India is the idea of the future of finance evolving. India really is at the epicenter of this. It's at the forefront of this. It brings more and more people into the financial ecosystem. And that's part of the reason why I think, despite recent cyclical weakness, when we look at the structural dynamics in India, it's a case to hold above benchmark weights when it comes to Indian equity.
Interesting. You said that, geopolitics always had an influence on the way markets have moved. But trade was for the first time, or tariffs were for the first time were brought in as I would say, a big factor in the way flows are going to go about in global markets, especially to the emerging markets there. Do you see tariff debate to continue into 2026, given the fact that not many countries have signed on so far, including India, and there is a Supreme Court ruling pending in the US, and that would again take the entire narrative of tariffs going into the first half of 2026?
Yeah, so you've touched upon some really interesting points. I think the idea of this continued uncertainty around tariffs in terms of the domestic ability to enforce them, and also the international kind of landing zone in terms of the trade deal struck, then that will be something that could continue to weigh on sentiment, on businesses kind of having clarity in terms of the investment plans they wish to deploy. I think the base case would be that we have greater certainty. I remember actually when we kind of look back on April of 2025, I think with the benefit of hindsight, maybe that was peak uncertainty globally. Now, it doesn't mean that that's a sort of straight line down, but I think it does mean that 2026 should be one where we see less of an impact from the dynamics you're talking about. So, as you say, we don't have exact clarity as to when certain trade deals get signed, but the expectation and the noise that we're hearing, I guess, is that that would be a sooner rather than later thing. And the more that markets feel reassured that that's the case, the more markets feel reassured that, whatever disruption that has caused in the past is kind of a in the rear view mirror thing, the more ability for the domestic economy to regrow and to kind of buck the cyclical recent downturn that it's seen. So I think in summary, yes, the thing to watch out for if we're thinking about risks to the kind of core view would be that there's a continuation and elongation of some of the uncertainty we've seen. But I don't think that's the base case. I think the base case is that we see greater resolution in the short order, which means that 2026 is a story where we're looking back on this as a major source of disruption.
Interesting, because if you look at how the currency markets are, are reacting to this, or for that matter, how the commodities are reacting to this, is totally, different in that sense. Trade is creating an issue with respect to currency, depreciation, especially in some of the emerging countries. The U.S. currency is also, getting weaker against some of the other currencies as well. And from a commodity point of view, oil continues to be, subdued, despite the fact that the Russia-Ukraine war continues.
You're right, and I think the ability of anybody to kind of foresee the kind of end of conflicts is limited, right? So I think it's hard for us to kind of draw too much certainty around that dynamic in particular. But going back to the broader point on currency, you're right. This has been a year, 2025, in which the US dollar has depreciated somewhat meaningfully, and that's raised questions more broadly as to what role does it play in the global ecosystem on a go-forward basis. And we're pretty firm in this view that we do not see anything shifting the US dollar central role in the global ecosystem. That will continue to be the case. And two things can be true at the same time, right? You can have an element of near-term comparative expensiveness that needs to kind of follow some sort of a broadly cyclical pattern, but that doesn't mean that the structural role it plays is any different. And I think that's what we've seen in 2025. More questions being asked, but I think clearly now markets are settling on the idea that this is something that... And then when it comes to the implications for particular pairs, particular currency pairs, such as the Indian rupee or any other, I think there it really comes down to some of the aspects we were talking about earlier, right? What is the progress on those trade dynamics? What is the progress on, some of the things that mattered in 2025 and hopefully matter less in 2026? Because again, going back to the point I made right at the start, historically, traditionally, you might think that there's a sort of cyclical macro element underpinning all this. You might think that maybe because the Federal Reserve is starting to cut interest rates or continue that interest rate path, then as a result of that, that has certain natural implications for the dollar, such as weakness, that has implications for emerging markets. And those traditional playbooks are the ones that I'd query more in this environment. I think those are dominated by those megaforces that I've talked about. So I think really this is all about the way in which some of these megaforces transpire. I would anticipate that the slide that we've seen in the US dollar is not repeated in 2026. It's more of a kind of neutral, weak kind of view to start with. And then in terms of the rupee, yeah, we've seen, I guess, a little bit more of a fluctuation than the past. But in general, as a relative story to other emerging markets, the Indian rupee is, I think, a little bit more stable, right? It's a little bit more supported by the fact that external debt is a comparatively small share of GDP. It's a little bit more supported by the fact that the domestic kind of funding sources for businesses is strong, and as a result, less reliance, I guess, on overseas in some ways. So to my mind, I think the kind of relative currency stability in India relative to others is a force for a cyclical rebound to start to come to see at some point in 2026. And also, I do not anticipate a continuation of the trend we saw in 2025 when it comes to the US dollar.
If you look at the foreign investors, they've been net sellers this year, more than $18-19 billion of net sales which have come in. And they continue to be net sellers on a daily basis, and despite that, the markets have been holding on because of the domestic inflows which are coming in. How do you see foreign flows moving from here on? Because towards the beginning of the year, or maybe a couple of weeks, till a couple of weeks back, you had the AI trade which was driving global markets, especially the US markets, and India was seen as an anti-AI trade, which was because of a very less dependence on AIs or AI products, which in that sense. Do you see flows going back to emerging markets, especially like India, where AI is there in form of some of the services and is getting developed rather than being in product and and platforms?
Yeah, so the headline answer to your question is yes. I think over the course of the coming years, I do anticipate foreign investors to, continue the trend that's a multi-year trend, I guess, of greater investment in India. Like you rightly say that the 2025 story, and going back a little bit further, has been one of outflow. But the size of the numbers you're talking about, in the grand scheme of things, are comparatively small. I would view this in a slightly different framing. I would view this as, despite the material uncertainty around the policy path in terms of trade, etc., as you rightly say, the equity markets are broadly held up. I think what that tells me is at a point at which we see greater clarity, the signing of trade deals and so on, then that frankly unleashes a little bit again the idea of domestic growth, and therefore the idea of foreigners wanting to be more part of that. And when it comes to the AI story, it's a really interesting point. And when we've been formulating our broader global outlook, one of the things that we've talked about is this idea of, for a global investor, beware of a diversification mirage. What do I mean by that? I mean the idea of just investing in something that isn't the dominant trade just to spread your bets around, right? That I think doesn't make much sense. And indeed, if you were to have been purchasing the equally weighted US equity index rather than the market cap weighted, you'd have lost out a lot, because clearly the AI trade did well. What we say instead is, when it comes to diversification, really pick those regions, those countries, those exposures where you think bottom up there is a strong reason for positive growth, which might have a different driver. And that is what I would think when it comes to India. So when I think about this sort of strategic horizon, in part because of the dynamics you've talked about, because it's less of a direct AI beneficiary, well, actually, this is part of the diversification trade here. Like, it's not just not investing in AI stuff. It's investing in something that has an independent source of likely future strong earnings growth, an independent source of likely strong future returns. The idea of foreign investors, as I say, coming back. So I think that story is one that started to take hold. I think that will continue to take hold over the course of the coming years. I say years because I think it's very hard to kind of time the very near term, right? We have seen some cyclical weakness. I would anticipate maybe that would continue. But many who are kind of investing in the stock markets do so not just with a next week or next month focus, they do so with a multi-year focus. And in that context, I think it's hard to look beyond India as a source of potential attractive returns that are diversified from the same core drivers, right? This is a region, a country that's on course to become the third largest economy in the world in the course of this decade, and yet it makes up, a couple of percent of global equity indices overall. There's a mismatch there. This is something that I think is a structural opportunity, and as you say, as we framed in this question, has some natural diversification benefits, as well as independent sources of alpha and return generation, which makes it attractive for foreign investors in the future.